Hey Mary,
Hi, John.
and today's another version of Licata Live, and I'm happy to be with you, Mary. Mary, how long have you been with us?
Uh, let's see. I think this is my seventh year. Yeah,
You
a
you
little over
you
six
you
years.
you have been amazing. You know,
Thank you,
people
John.
ask me all the
That's very
time.
nice.
People ask me all the time, "What are you good at?" And I say, "Not much, but I am good at finding good people, and you're one of those good
Thank
people.
you, John.
You're an
Very
excellent agent.
nice.
You're an excellent agent. But today is about real estate. It's not about Mary.
That's right.
What's that? What was that movie? Something about Mary?
Yep.
That was one of your favorite movies, wasn't it?
Not really.
Oh, come on, can't you go with it?
Okay.
All right, but I have a question for you because this
Okay.
is real estate.
Okay.
So, what are on the listing side?
Okay.
Um, what are the you're hearing from the clients their biggest challenges are? Things that to help them. What are the biggest
From
challenges
the
right now?
listing side?
Well, I'll tell you
I
what.
mean, the
Well,
listing
we could go
side,
buyer or listing. You pick
okay.
one. Which one would you want to? Which
I'll
one?
talk about the buyer side because I
Okay.
think that's more challenging than the seller side right now. On the listing side, the biggest challenge is it's really a challenge for the buyers. There's just not enough listings. Um, we're working with plenty of buyers who are ready to buy and they just can't find what they're looking for because there's so little inventory. And it seems to, it's really the whole area. I was looking at the listings in Culpeper this morning. There's just not very many here in Lake of the Woods. We have 18 on the market. This morning it was 19. Now it's 18. I think by the end of the day it'll be 17 unless something new comes on. And so people just don't have a lot to choose from. I mean, everybody knows we've talked a million, about the interest rates for months now. Those have not come down to where they are. That'll probably never, or where they were. That'll probably never happen again. At least no time in the near future. But they've stabilized and they've come down a bit. Um, but it's still a challenge as far as affordability because the prices haven't really come down. It's not as competitive as it was. However, I have seen two multiple offer, situations in the last couple of weeks. So maybe the prices will go back up. Who knows? Um,
Why do you think there isn't the inventory? I mean, why aren't
why aren't
people
people
putting their
listing?
yeah? Why aren't they listing?
I think there's a couple. I think that people hear things and they're afraid and they hear that it's not a good time to sell even though it is. There's also just the normal seasonal slowdown. I really think that in the next month or so, with the spring market we'll be seeing more listings. However, of course, then there's more buyers as well. So I think people have been kind of wrongly assuming that it's not a good time to sell just because it's not the market of 2021 where you had 10 offers the first weekend on the market. It's certainly not to that level, but it's definitely still a good time to sell.
Well, you mentioned interest rates,
Mm-hmm.
and I think people are starting to recognize that they can't look to 2 years ago and a year ago where interest rates were
Yeah.
2.5 to 3.5%.
Mm-hmm.
Um, it appears that the interest rates peaked at a little over 7%
Right.
in November.
Yeah. Mm-hmm.
And I think right now they're right around 6%
Mm-hmm.
for a 30-year mortgage. And what I've learned over the years, the people that I listen to and the real estate economists say that typically when they peak, they'll eventually drop about a point and a half.
Yeah.
So we're down about a point, maybe a half a point to go if that's the case.
Maybe. That
And that
would be
would bring it
great. That
down
would bring us
to,
back
to
down,
five and a half or so.
which is kind of where we were, last summer when they first started
Going up.
and I want to say, yeah, about last summer
You know, to
in the
to
fives.
um, to a vintage person like me, I'm not going to say old, but certainly vintage, 5.5 doesn't sound bad.
Right.
Um, but when you're 40 or younger and all you've seen is less than 4%, it is what it is. You know what you know, and it certainly has gone up. I don't expect that we're going to see it drop to that point.
Yeah. Well, I think, part of what the challenge was just how quickly they went
Yeah.
from, the record low, and then within, 6 months time, we're up to the 7 range, and it really just made people reevaluate what they could do, because it affected their, most people live in the realm of the monthly payment, as opposed to the actual house price. So your payment, the hundreds of dollars it was going up because of the interest rate jump, and the fact that houses are still, very expensive, and the
Yeah.
prices are high. It just, that combined, it really changed the affordability factor for a lot of people.
Yeah, if you were looking a year ago or so at a $400,000 home and what the mortgage would be for a 400, today that's now dropped to 350, and that's a different
Right.
house. That's
Yeah.
a different
Very
house.
much so.
Yeah.
Mm-hmm.
Interesting.
Well, John, what do you think is well, let me ask you then, since I talked more about the buyers, what do you think is the biggest challenge for sellers right now?
Well, the biggest challenge, and that's a great question. The biggest challenge, I think, is the mindset of a couple things. But one is today's seller with the mindset of a year and a half ago saying, well, I could price my home above market and it's going to sell for even more than that.
Mm-hmm.
So just them not totally coming to the realism of what the reality of today's market is. So that's one challenge.
Mm-hmm.
And the other challenge, again, relating to interest rates, I've got a 3 point, like I have on our home, and at the time it was high. I have a 3.62% interest rate. Do I want to go to a 6% interest rate?
Right.
So that gives me a little pause. Now, depending on where you are, and of course we sell all over the region, if I'm in Fairfax, that's a professional, career-oriented, family-oriented person who's probably going to get a mortgage.
Mm-hmm.
If I'm in Central Virginia, I want to leave Northern Virginia. I want to leave Fairfax, and I'm going to take my equity, and maybe the interest rates aren't going to be as big a deal here, because maybe they're going to buy cash
or pay more
or put a lot up front.
Yep.
A lot up front. But from the seller standpoint, I think it's the mindset. The other thing is, they're fearful that they're just not going to get as much out of their houses as they would have a year ago.
Yeah.
And
they might not. They might not, but it doesn't. But waiting is, you really don't know.
Yeah, I mean,
that was kind of an unprecedented market.
The unknown is the unknown. We don't know what it's going to be like a year and a half from now. But when when you think about it, if I bought the way I think, if I bought my home for 300, and I want to sell it for 4, and I don't sell it for 4, I sell it for 390. I still have a big upside there.
Yeah, absolutely.
I bought it for 3, I put it on the market for 4, I'm getting 415. That's probably not going to happen. That's probably not going to. So I think it's the mindset and just articulating and helping people understand the reality of today's market.
Yeah.
Today's market.
Right.
I know I was watching a stock. I was watching like Ford. Ford is trading. Ford stock's trading like at $13 right now. It's traded a lot higher,
Yeah,
but that's the reality of where it is right now.
sure.
So, to a same thing. There's the certainty of real estate is the same way. And generally, I think just generally, you know, there's so much information. I think this is the challenge for both buyers and sellers right now at all levels. Um, the If you follow the headlines do more to terrify than to clarify.
That's true.
And what do we mean? What do I mean by that? I mean, that's pretty poignant, but there's so much information out there right now that folks are confused. Like, oh my God, I mean, there's just so much information. And some of it is good information, some of it's not so good information, some of it's correct, some of it's not. But the headlines, so we tend to migrate and jump to the headlines. And I was looking at something and paired it back just happened the other day. And the headline was it was relating to 2022. It said foreclosures were up 115% over the previous year. Mm-hmm. Now that's a headline, and that sounds horrible. But the reality is, when you really look at it, there were 324,000 foreclosures.
Which is still historically like a record, not record low, but a very low number of foreclosures. Sure.
In 22. In 21, there was 151,000 foreclosures. In 2019, which is pre-pandemic, there were 493. And you know what? In 17, 18, and 19, almost each year, it was close to 600,000. Right. Mm-hmm. And in 2011, it was like 1.4 million. Mm-hmm. So yeah, foreclosures are up, and the headlines are true, but the reality of the situation, they are way down.
They're not looking at the whole picture.
But I think most of the folks that are thinking about real estate are looking at the headlines, and they're getting terrified more than getting clarified. So that's where, I think having a good agent, having a good real estate company like Licata Group, like Mary, and who understands the market, understands the reality, and is a student, could help both the buyers and the sellers, manage that anxiety.
Yeah, and also just decide what's right for them, because there's some people where it doesn't make sense. Like you were saying, if you've got a 2.5% interest rate, you don't really have any great reason that you'd want to move and sell your house and get another mortgage at 6%. I mean, it might not make sense, but it helps to really look at it on paper and run the numbers and have someone who can help you do that and factor in all the different costs and and do that for you. So,
but on the flip side, I would say, Mary, for someone's situation, I'm thinking of someone I had a conversation recently who wants to move to Florida to be near their family.
Yeah, well, then they have a good reason.
Yeah, and they may they're going to pay a higher interest rate, and that $200 or $300 a month affects their lifestyle. I'd rather spend $200 or $300 a month, if I can afford it, to do something like that.
Oh, absolutely, yeah. If it makes sense for you, it's every situation's different.
So I think that's our Licata Live today. We talked about the market.
Yep.
Great to see everyone. Thank you for tuning in to Licata Live, and we'll see you next time.